is it a classic relief rally in that maybe we think coronavirus is peaking or isn't going to be as bad as we thought? The impeachment drama is over. Brexit happened and nothing happened. And the Chinese have said, basically, we're going to stand up and we're going to support our economy with liquidity and in other ways.
I think it's probably all those that you mentioned, but also we've actually had some pretty impressive numbers hit this week. ADP shows that private jobs were increased by 291,000 for January. That's really impressive. And aside of that, you've got the Atlanta Fed estimating that GDP is going to be 2.9% for Q1 2020. So I think those two numbers are also adding to this almost relief rally.
So, Mark, I point to the atmospherics. Michelle, I think quite fairly and rightly, points to some of the fundamentals. What is it that is driving the market now and potentially continue to drive it into the spring?
Well, I think a couple of things, some of which, of course, Michelle mentioned, and that is evidence that the U.S. economy remains quite solid. In fact, might even be showing some signs of accelerating here. But in addition, and importantly, is the global backdrop. We won't know for some time exactly what the economic impact of the coronavirus is going to be on activity not only in China, but also as it radiates out throughout the emerging market complex in Europe in particular. But before we had the January 1st news of the outbreak, we had already begun to see improvement both in China domestically and elsewhere. And of course, we saw that here recently with the J.P. Morgan Global Manufacturing Purchasing Manager Index, which has improved for 4 consecutive months and is now into expansionary territory. So what is eliciting is a global backdrop that's firming, if not outright accelerating, which is bolstering expectations that whatever the impact from coronavirus is, it can create demand that will lurch forward positively subsequent to its peaking and therefore provide a fertile backdrop for corporate profits.
Mark, I wonder if we've been too quick to shrug off the sort of ripple effects from the coronavirus. Bill Bishop, who I respect greatly, his views on China, says he thinks this is as close to an existential crisis for Xi and the party that he's seen since 1989. And he says he thinks even more so given the events of the past week. Now, maybe that's too long term to price into the market right now, but have we really gotten our arms around the reverberations here?
I don't know that we have, Kelly, and that's a great point. I mean, obviously, President Xi and the regime are going to do what they can to try to stabilize economic activity, and we've already seen certain measures taken here recently to try to do just that. This is on the back of course, the trade détente and some indication that their economy once again had begun to stabilize. And we also know next year, 2021, is the 100th anniversary celebration of the Communist Party. So they're going to do whatever it takes, in the words of Mario Draghi, to make sure that their economy is putting a good face for the world. In the meantime, though, we just don't know the evolution of this virus. We can look at past its prologue, but China back at the SARS outbreak represented less than 5% of global GDP. Today, it's almost 20%. Much different.